doing well. So we talked about the theory of investment, and today I wanted to actually show you how you can start investing. Some of you may choose to invest actively, but some of you want to invest into something but don't want to spend too much time about it. They just want somebody to manage it for you. And I think Vanguard Life Strategy Funds is a good place to start. And I explain you as we go along why. So Vanguard is one of the biggest financial investment firms in the world and has been historically recommended by such big gurus as Warren Buffett, Ray Dalio, and other big investors. And I've been investing with them for 3 years, and I must say I'm pretty happy. Just a note, I do not invest into a life strategy fund, but I invest into a few other ones, and later on I'll explain to you why. But still, I think life strategy fund is really good place to start, especially if you don't want to be checking the markets all the time. So what is life strategy funds? It's a fund that was created by Vanguard, and you don't have to worry about the geographical diversification, sector diversification. The only thing that you need to decide on is your risk exposure. So there are 5 different funds for all levels of risk, from the cautious investors, where you only have 20% equity in your portfolio, to 100% equity, like people who like to risk a little bit more. There's no right or wrong answer. It's just how you feel. Sometimes financial planners offer this rule of thumb advice. They say your age should equal to the bond exposure. So for example, I'm 35 and I should have around 35% bonds in my portfolio. Now the markets currently are quite volatile, and it also depends what you want to do. It's the world is your oyster, really. But if, for example, you have not that much saved at the moment and you're still pretty young and you're willing to risk, usually you should put a lot more money into equity. If I would be choosing something for myself, I would go for a life strategy 80-20, so 80% exposure to equity and 20% bonds. So I think it's for me it would be a good allocation. So let's look, what is this fund about? I should say that this is all these funds are accumulation funds, and what it means that any dividends that you're going to get from the companies where your money is invested is going to be reinvested back. It's a very good thing because obviously your portfolio is increasing, but also you don't have to worry about paying the dividend tax or paying the tax on an interest you've earned. Let's have a look at the size of the fund. It is 4.9 billion. It's quite big and steady fund. It's always nice to see that. It means, like, should you decide to sell it, you will not have any problems. Let's look, what do they invest in? So Vanguard invests into its own indexes and into its own trackers. As you can see here, they have a pretty big exposure to UK and the US, but they also have some exposure to Japanese stocks and emerging markets. But the big skew is on US and the UK. Historically, I don't know why, but this is a rule of thumb that all these funds, they always do big exposure to the home market. So as we're in the UK, we're going to have a lot more exposure to the UK market. This is one of the reasons why I, for example, don't invest in the life strategy fund, because I'm a little bit skeptical about the UK, just myself. And since I'm Russian, I would also like to invest a little bit more into Russian market. Well, I think it's just I don't know. This is important for me. So, but like I said, you need to decide for yourself. Let's look at the price and the performance of this fund. So I usually like to look at the price for 18 months because it kind of tells you how it was going and doing. So yeah, imagine if you buy in March, you would have a pretty good return, almost 60%. But who knows these things. One of the things that I always look at is the annual um, return that the fund was giving. And yeah, as you can see here, in 2020 it did 7.6%, which is a pretty decent return. 2019 was a really good year with an 18% return. It didn't do that well in 2018, but that's 1 year out of how many. It's just 1 year out of so many negatives. I mean, past performance is not a good predictor of the future performance, but it's more like psychological to know that this is a fund that has been returning the good returns. I also like looking at the cumulative because it kind of gives me a perspective and motivates me to save more. So, for example, if I would have invested into this fund 5 years earlier, I would have gotten a hefty return of 65%, which is pretty good. There's no bank that would give me such a return. Now let's look at the costs of having this fund. So the ongoing charge for owning this fund is 0.22%. So what it means is that for every £1,000 that you invest, you will have to pay £2.2 for owning this fund. It's one of the lowest charges in the industry, and that's why Vanguard is so interesting for a lot of investors, and a lot of investors choose it because it has very low fees. There's no entry charge and there's no exit charge, which is great because some of the more active funds, they take quite a lot of money for you to enter or to exit. Now, one needs to mention that on top of this charge, there's annual account fee, which is 0.15% for Vanguard. And it means, for example, if you would invest £1,000 into this fund, the cost for you would be £3.7 a year to invest. But, when you have really good returns of 8%, it means for every £1,000 that you invest, like for example last year, you would have gotten £80, and to pay £3.7 is not a big deal. Vanguard is also quite lucrative and interesting for investors because it's very the initial deposit that you need to make is very low, so you can start with a one-off payment of £500, and this is how I started. Although I invested in a different fund, which I'm going to tell you later about, probably in a different video, but that was my initial investment, £500, and yeah, it helped me to gain confidence in understanding what is going on. And you can see you can create a monthly debit of £100 or more, however you want, so that you are consistently investing. That's a really cool feature. What else to say about this fund? These funds are passively managed, so it means that there is no active fund manager, and just computers do reallocations. They always make sure that you have 20% bonds in this case and 80% stock. Why is it important? Because assets go in value up and down, and during the year it might be that some assets grew up in price a lot, others have decreased in price, and your portfolio will be skewed. So the computers do this thing for you. So yeah, pretty much a really good passive investment thing. It is quite diversified, the portfolio. It's a good and a bad thing. So it means that if there are some sectors that will earn really high returns, you will not be able to get those returns, because they will be smoothened out by the sectors that were not performing that great. But equally, when some sectors fall down, you will not feel the fall as strong as if you would have been invested in one sector only. Overall, I think it's a very good first step to start investing. And yeah, I hope this review has been helpful for you. I'm really sorry about my funny talking at times. I'm a bit nervous. It's the first time I'm doing such a video. And to be honest, I started like, I don't know, 20 times. And this time I said, okay, enough. Like, you can't do it perfect, just do it, and just put it out there. Please do let me know if you have any questions or you need any more support. I'll be happy to answer all of your questions. One thing which I wanted to mention to you: if you decide to open an account with Vanguard, go for an ISA, because like I've mentioned to you previously, ISA means that all the interest that you're going to earn will be tax-free, and this is quite important. I hope you found it useful, and please do let me know if you need any more help. Thanks.